Climate change is now constantly in the news and debated everywhere, with COP26 on the horizon and the recent update from the IPCC on the state of the climate. There is so much information being discussed across all sectors. Today, we're going to focus on what it all means from a risk management perspective. What can be quantified or factually analysed with confidence? What is certain? What remains very much uncertain? And what can we do to manage a changing risk landscape, both now and into the future? Hello, my name's Peter Cheeseman, and I help the APAC Analytics based in Sydney. And I'm delighted to welcome Steve Bowen, who is the head of Catastrophe Insight, Managing Director, and he joins us today from Chicago. Steve, welcome, and maybe you'd like to just briefly go over your role at Aon.
Sure. Well, first, thank you very much for the invitation to speak today. I'm really excited about the next half an hour with our discussion. My role has been focused on real-time and historical natural disaster analysis around the world. And within the last couple of years, especially, climate change has become a really important point of focus, not just internally for Aon, but also all of our clients. So this is a topic that we know is gaining a lot of steam internationally, and there's a lot to discuss, and look forward to touching upon some of that today.
Yeah, thank you, Steve. Now, I thought before we go into real questions, I thought it may be a good opportunity for you to perhaps clarify some of the model definitions, because we hear climate change modeling used all the time, and I think it's a good opportunity just to clarify the different forms of modeling that we perhaps would use in a risk management landscape.
Sure. So there's really four main types of modeling that we deal with when we're talking about insurance. So the first one is numerical weather prediction modeling. So that really is, say you're on your phone and you want to see what the weather forecast is going to be for the day. Those are the types of models that are being used to generate the forecast, what that's going to be in the near term. So it's your daily weather forecast that we use. Now, global climate models, which is what we're going to be spending a fair amount of time about today discussing, these are models that are looking at a much longer time frame. So we're talking about decades or centuries ahead in the future. And it's also taking a look at how the environmental and oceanic conditions are going to be changing over time. And then subsequently, you can downscale, you can do a lot of different types of analyses to get a better sense as to what the future conditions may look like from a weather and climate standpoint. Now we have catastrophe modeling as well. This is a topic that many of you are familiar with. Here at Aon, we have impact forecasting, which is our in-house catastrophe modeling group. Now, this is a type of modeling where you are taking hazard data, mostly from the historical perspective, and then you're running a portfolio with a scenario to come up with a loss estimate. So you're taking basically data that eventually, or at one point, came from a numerical weather prediction model, and then you're running these different simulations to get a financial component behind it. And then finally, this is an area that's becoming more, I would say, prevalent, especially in the private sector. A lot of startup companies are doing climate risk modeling, where it's essentially blending together your catastrophe modeling framework with global climate models to be able to really get a bit more targeted, and you're pinpointing more specific locations on what future climate environments may look like. So hopefully that quick overview will help as we start to talk about models and different types of modeling here in the next 30 minutes.
Yeah, thanks, Steve. And a large part of, we have about 25 catastrophe modelers across the APAC region and here in Sydney as well. And so a lot of the things they do is very much in that catastrophe modeling area, talking about what is the current risk to any portfolio. But they're having to add that extra component into their analytics now, looking at climate risk modeling. So those very much the two right-hand side boxes in this slide. Anyway, the section in the media, as we've already talked about, around climate change and the potential impacts it will have on natural hazards such as floods, bushfires, cyclones, in terms of what we call frequency and severity. But every event we now seem to hear about is accompanied with a sort of climate impact tag or a subject thread. But actually, what are the challenges from a scientific standpoint to accurately decipher the potential impacts? And how can we now be certain that current events are a result of climate change?
Well, it's a very tough question to answer, in all honesty. I mean, obviously, the biggest challenge is around quantifying or qualitatively discussing the uncertainty around these events. We certainly know that climate change continues to have fingerprints on individual events. We're starting to see the behavior of events occurring more unusually than we've seen before in the past. But we also can't look past the fact that weather has always occurred. It's always going to occur. And, you know, the big focus is what do we do knowing that climate change is going to continue to cause events to behave a bit more unusually, or different scenarios which perhaps we might have considered to be tail events, events that are really unlikely to occur. Now they might start to become a bit more likely to occur. So say an event was deemed a 100-year event 25 years ago, that now may be a 1 in 50-year event, because as we continue to see warming of the oceans and the atmosphere, that leads to more unusual behavior, more rapidly intensifying storms, more precipitation per event, or consequently, you could have more extreme drought, which I know in Australia has been a really big concern in recent years, and that also led to the significant bushfire season we saw in 2019 into 2020. So there's a lot of uncertainties, a lot of things that we know, and when you combine the hazard risk on top of the fact that we continue to see a lot of folks are moving into high-risk areas, it really creates a real need to start planning and start thinking about mitigation and resilience measures to limit the risk that we know is only going to grow when we're talking about hazards specifically.
Yeah, that's interesting. It's probably fair to say that not everything should be labelled climate change impact event. And I think the key word that you use there is unusual. So if we think about that, an event that occurs out of season is unusual. So is that an early bushfire or a bushfire season that's extended beyond the normal timeframes that we usually see, or an event that's occurring in a location not usually impacted by a fire or a cyclone or a hurricane. And in fact, Steve, the recent hurricane in the US, Hurricane Ida, I think threw up a good example of unusual impact. So while we had New Orleans, where we had a massive new flood levee built as a result of the impact for Katrina, we also had that devastating flood impacts in New York City. So did the levees hold out in New Orleans? And what has been the reaction to the devastation in New York City?
Yeah, Hurricane Ida was a real great example of what climate change may look like in the future when we're talking about tropical cyclone behavior. So the storm became just the latest event which underwent rapid intensification up to the point of landfall. We know that it struck just south of New Orleans and very slowly came inland. It took a long time for the main winds to start weakening and get below hurricane intensity. But that slow motion also led to prolific rainfall in southern Louisiana into other parts of the southern U.S. Now, the good news is that a lot of the infrastructure that was built post-Katrina in 2005 did precisely what they had hoped it was going to do. They spent nearly $14 billion to build a brand new levee system, and for the most part, it performed very, very well. Now, there are other parts of the infrastructure around greater New Orleans and parts of southern Louisiana which did not do as well. We're talking about the electrical grid, for instance, where you had power lines and power poles that were built only able to withstand winds up to 110 miles per hour. And we saw with Ida, when it came ashore, it had maximum sustained winds of 150 miles per hour. And we actually had measured gusts approaching 170 miles per hour, so a really, really intense storm. So the good news is that the levees held. They held back all that water in Metro New Orleans, but there was just so much other devastation that occurred in Louisiana as well. Now, if we were just talking about Ida's impact in the southeast, it would already have been a really big deal and a very catastrophic event. But unfortunately, the remnants of Ida, they stayed together. They started meshing with a frontal boundary, and by the time it approached the Northeast, especially around New York City, it was tapping into very warm waters in the Atlantic Ocean. And we saw this unbelievable amount of precipitation in a short amount of time, which led to significant flood damage. Now, I would say that New York is probably the opposite in terms of comparison to New Orleans, in terms of how New Orleans, post-event, they really worked to modernize their infrastructure, was able to withstand the volume of water. In New York, we saw basically a complete collapse of the system where significant floods occurred in the roads and bridges and the underground subway systems, just not capable of handling this level of rainfall. And frankly, they've seen a lot of this type of extreme rainfall in the last decade or so, which has probably weakened a lot of the infrastructure there as well. So the need to start planning, understanding that these types of events are going to become a bit more frequent, and certainly more intense in terms of their impact. We need to be spending money to save money down the line, because we're talking about a really big bill that's going to be coming out of IDA here over the course of the next couple of months.
Yeah, absolutely. And I think there's as much debate around climate changes, around reducing carbon emissions to try and bring temperatures down. I think actually there needs to be as much debate now, accepting that things are going to change, that we need to spend as much debate on resilience and mitigation going forward to make sure that we're in a better position to handle the sort of change in environment of different events. But anyway, just moving on. Every year Aon publishes a review of the previous year's natural hazard activity. And indeed, you and your team, the sort of chief architect of this excellent report. Now, I remember reading that despite the potential impacts of climate change might be having on these natural perils, urbanisation, and more specifically coastal urbanisation, is the key contributor to the increasing losses we are seeing at a global scale. But do you think this phenomenon still remains the key influencer, or has a loss escalation changed, and is the signal slightly different now?
Yeah, it's a great question. You know, when we're talking about losses, there's undoubtedly been a significant increase in the last several decades in terms of the aggregate incurred losses that we've seen over time. Now, we've already discussed the hazard part. We certainly know that the hazard, the events themselves are acting a bit more unusually, differently than we've seen before in the past. But you also can't overlook the fact that we continue to see population migration patterns really shifting. People, frankly, are addicted to living along the coastline. They're addicted to living in areas which are frankly known to be high risk when it comes to various types of natural perils. So when you combine the fact that you have more people and more stuff in harm's way, on top of the assumption that we're going to see more intense events, you're just basically adding a whole bunch of ingredients, making them worse, and then being surprised that the losses that occur end up being higher than what we've seen before in the past. So, of course, the hazard is truly important. Of course, climate change is a really big role here, but we also can't overlook the fact that until we start better creating awareness, if people are going to move into these high-risk areas, are we ensuring that there is proper building and code enforcement? Homes that are there, are they being retrofitted to be able to withstand a potentially more intense event? Are we also taking into account the various changes in land use? Because in terms of flooding, for instance, we know that water is always going to find the path of least resistance. And if you're building new construction, then water may not behave or flow the way that we've seen it, say, in the previous decade. So it's a really complex topic. You know, it's really tough to blame one thing. It's always a bit more difficult than that. But this is certainly one area where I think there's been a lot more of a spotlight put on it, and at least there's some good conversations moving forward on how we're going to be planning for the risk in the future. Yeah,
absolutely. You know, and everyone listening on here will know that Australia is a country of coastal urbanisation, and it's probably worth noting around Australia, under current predicted sea level rises, that we're potentially in a position of losing 50 to 200 metres of shoreline along sandy beaches by 2100. So significant changes will be seen across Australia. Now, recently, the Intergovernmental Panel on Climate Change, which people know more as IPCC, brought out its latest State of the Climate report. And I think this was their first update since 2013. Now, I realise I think it was about 5,000 pages long, so we'd probably be here all week if we were trying to summarise that from your perspective, Steve. But what are the most telling things in the report, though? You know, and what differed from the previous report, and what about us in the risk industry? What would we do with this information?
Yeah, so as you mentioned, it's typically 7 or 8 years in between the release of the new variation of the report. I would say for me, that for folks that have been paying attention in the last 7 to 8 years there wasn't a ton of new material in this release that was truly surprising. I think that there's been a lot of great advancements coming out of the academic space and a lot of governmental bodies that are doing, spending a lot of money on research, where there really were a lot of, I would say, leaves coming out ahead of this, where people were sort of picking up and understanding where the report was going to be heading. I will say that the biggest change between the fifth assessment report and the sixth assessment report was more the tone of the report. It certainly felt more, I would say, absolute, especially when we're talking about certain perils where we do have more confidence in terms of understanding what climate risk is going to look like. And when I'm talking about that, I'm saying more temperature-related perils. There's still a lot of uncertainty around, say, severe convective storm in terms of what climate change is really going to do to the frequency or the intensity of the events. But we certainly have more understanding around temperature, precipitation events. I mean, you just look at the basic laws of thermodynamics. I promised I wasn't going to say it, but I'm going to say it anyways. The Clausius-Clapeyron equation, which basically says that for every 1 degree Celsius of warming, that the atmosphere can hold at least 7% more moisture. And so subsequently, when you have these types, heavy rain events, you're going to be seeing more flooding rains that are going to occur because of this. So I would say that the tone was definitely, I would say, the biggest shift. The biggest surprise for me personally, I would say, is that this was the first time where we saw that, given all of the various scenarios, the emission scenarios, that even the lowest one, where we're assuming, say, that 2.5 SSP, which is they're now known as opposed to RCP, that even that scenario suggests that we're going to be crossing that critical 1.5 degrees Celsius rate of temperature growth over time, which of course is higher than the Paris Agreement from a few years ago. So that's definitely a big change. But the good news, I would say, coming out of this is that it does appear to be more consensus that we're probably not quite on the path that we've seen before of, say, RCP 8.5, SSP 8.5, which is sort of the worst case Armageddon scenario, where I think enough movement has been made by countries around the world, and also private sector promises that they're going to be taking steps to limit their emissions. And because of that, hopefully, as we get towards the end of the century, we're going to be on a lower track. But make no mistake, any of these pathways is not good, and it's going to be leading to more, certainly, hazard uncertainty and more intense hazards in the future.
Yeah. So as I said earlier, the IPCC report was 5,000 pages long, but actually this was brilliantly summarized by the ARC Centre of Excellence down to 4 pages when they were just reviewing the impact to Australia. And, if the audience, if they were interested in receiving this 4-pager rather than a 5,000 page thing when they're just looking at Australia, please contact your local Aon office and we can make this available. But that 4-page article said that what Australia can expect with sort of what we'd say reasonable confidence is an increase in risk of ecological and agricultural droughts. We can expect more intense, short duration rainfall. This is an interesting one, less frequent, but perhaps more intense cyclones. We can also expect intensifying land and marine heat waves, and an increase in the intensity, frequency, and duration of severe fire weather. So that duration aspect is talking about the extension of the fire season. Let's think about what we do with all this information. So armed with all this, that climate change will have a significant impact in so many areas of our lives, from both personal and professional, the companies we might work for, the companies we might represent or interact. What can we do now to understand the short and longer term impact climate change might have?
Well, it's all around planning. I mean, we have a lot of great tools available. We certainly, we have the 5,000 pages, roughly 5,000 pages from the IPCC report. We have a lot of great emerging relationships and collaborations with various academic groups, more governmental relationships, a lot more planning to really start to ensure that we're starting to take this risk more seriously, and we're starting to put proactive measures in place. I mean, the biggest challenge here is that we don't have complete certainty in what the final product is going to look like when it comes to climate change. But the fact that there's so much movement and there's so much investment being made, even in the private sector, that we're starting to really feel more comfortable and more confident, and starting to see real-time examples of when various parts of the world, look at Germany, for instance, they had the massive flood event in July of this year. Areas that had invested in flood embankments and various things like that, they perform much better than areas, say, downstream, which unfortunately hadn't had the same type of investment. So we certainly know that there's a lot of things that can be done, but the hard part is the planning part and making sure that all the stakeholders are coming together to put forward an actionable plan that's going to lead to real-time solutions in the near term, while also thinking about the long term.
Yeah, yeah. But in some countries, regulators have already started to introduce regulatory measures to force companies, and specifically those companies in the financial sector, to disclose their financial impacts to future climate change scenarios. But actually, factually, how would any company actually go about developing such a disclosure?
Well, there's a lot of frameworks that are available. The most popular one is TCFD. They really do provide a pathway forward for companies that are trying to figure out the best way forward as they're trying to take ESG with more seriousness. I would say that every company is probably at a different path in terms of how much planning they've done, how much comfort they feel in terms of putting together strategic plans, because a lot of this is going to involve a lot of transitioning away from current investments. And there's gonna have to be a lot of planning to make sure that it doesn't hurt the firm long term. So when we're talking about solvency, it's a really important topic, and we're starting to see murmurs coming out of the rating agencies, which are perhaps going to start scoring various companies on how much climate resilience investment that they're making, to make sure that they're taking the proper steps to mitigate against the potential future risk or the higher costs associated with climate. So there's a lot of, I would say the train has certainly left the station, and a lot of companies are having to look to TCFD as a basic framework to how they're going to be able to handle potential stress tests or whatever requirements are going to be needed to show they're going to be healthy moving forward.
Yeah. And actually, while not yet mandatory in Australia, many banks and insurers have already started to compile financial disclosures. And my own analytics team in Australia have been very active in assisting a number of clients through this process. And actually, for point of reference, if people want to look at it, many companies are already publishing supplementary reports about the potential impact to their business of climate change as supplementary to their annual reports. So there's quite a bit of information out there, and it's good to see companies not necessarily waiting for it to be a regulatory, mandatory thing that they need to be putting together to still show some actual desire to understand the future impacts. But, it's not all just about, we've been referring to a lot of it around physical risk, but it's not all about physical risk. As countries start to introduce tighter decarbonisation legislation, this will impact companies in different ways, either directly or indirectly. And this is usually termed transitional risk, and it's perhaps more challenging as the repercussions are actually very difficult to measure. So from your perspective, what are some of the direct and indirect aspects associated with transitional risk? Perhaps the obvious ones and perhaps some of the less obvious ones.
Yeah, I think in terms of the non-physical risk, what we've seen during the COVID environment has really, I would say, shown a bright light on where climate risk may be going in the future. We think about all the supply chain issues where factories being shut down, not leading to this cascading effect all around the world because other facilities then don't have the parts to be able to finish, the product that's being put together. So talking about this from a climate perspective, if we're thinking about, say, a cyclone event that causes significant damage across, say, parts of Southeast Asia, and you have a whole bunch of factories that get shut down, is that in turn going to lead to production issues because certain imports or exports coming into Australia or out of Australia are not getting there, and therefore products aren't just simply being able to be completed? So that is definitely one big issue that we're seeing becoming a much bigger problem. And I'll be curious once we get out of the COVID mess that we're currently in, whether there are going to be some lessons learned to move us forward in that regard. Other non-physical risks the companies are really starting to have to take more thought around is around the liability risk and litigation. We're starting to see various areas where if a disaster occurs and a company has not taken the proper precautions, are you going to start seeing additional lawsuits? Or companies going to have to start taking this into consideration because this is something that we're starting to see, not perhaps not as much as in Australia, but certainly in places like the United States, where there's a lot of examples in the last couple of years where this has become a bigger issue. So it's, the physical risk is, of course, the one that gets the most focus, but it's those non-physical risks around climate risk, which is continuing to become a much bigger part of the conversation.
Yeah, definitely. From a company risk management perspective, they really need to start considering their exposure to potential legal issues, and that's both in the boardroom and externally as companies become accountable for, their own carbon footprint. And, I would speculate that capital is going to become less available or perhaps more expensive for companies, perhaps not attempting to reduce their carbon emissions in the future. And all these areas, are still very difficult to actually put some quantification around, but it's very much an emerging risk. And I feel it really does need to be recognised and considered as part of any company's risk management strategy. Steve, we're sort of running out of time here, so I don't know if there's any final comments that you would like to make before we finish this session off today.
Well, I referenced this before in one of the previous questions, but I want to leave on an optimistic note, where I think we always think around climate change, and it's a very intimidating subject. It can sound very scary, but I have never seen a topic, at least within our industry, move as quickly as climate change has in the last couple of years. And I say it from the insurance perspective, but I think this is also true from a private sector and even a governmental standpoint, where we are really seeing a quick shift of focus and prioritization around climate change, and starting to make the right steps to ensure that we don't get to that worst case scenario. I mentioned before about the 8.5 scenario, where initially, say 10, 15 years ago, we were almost convinced that was the pathway we were on. But if we start to see more meaningful steps taken, then we don't have to necessarily get to that worst case scenario. And based on the commitments we're seeing by various countries around the world, I think that the good news is that we hopefully will not get to that point. But again, that doesn't mean that the risks are not going to continue to go up. But if we're not looking at the worst case, that's certainly good news for the near term. Yes,
thanks. Yes, good, really good comments. This is such a big subject that we've tried to squeeze into under 30 minutes. And I think the only thing I could say is that, I'm very much looking forward to talking to people like yourselves into the future as the way that we start to develop better tools, better solutions to help mitigate and manage and create a much more resilient sort of community and society around future climate risk. I really, really appreciate the time that you've provided us today. And, I think it's dinner time for you in Chicago, so hopefully you'll enjoy your dinner. And for the audience, really hopefully this was really insightful, and enjoy the rest of your day. Thank you very much, everybody.